Welcome back to XRP Insider, your trusted source for the latest crypto news, market analysis, and major updates shaping the future of digital assets. Today, we're diving into a massive development that's sending waves across the crypto market as Bitcoin, Ethereum, and XRP all continue holding key support levels, while global investors react to growing optimism surrounding a possible United States and Iran peace agreement. Right now, the entire crypto market is watching this situation closely because it could become one of the biggest macroeconomic turning points of the year. Bitcoin is staying strong above $77,000. Ethereum continues defending the important $2,100 zone, and XRP is once again proving its resilience by holding above $1.36 despite recent market volatility. Traders are becoming increasingly optimistic as reports suggest the United States and Iran are moving closer toward a ceasefire agreement that could reopen the Strait of Hormuz and ease pressure on global oil supplies. That optimism is improving risk sentiment across financial markets, and crypto investors are starting to feel that momentum shift. The big question now is whether this growing confidence can trigger the next major breakout for Bitcoin, Ethereum, and especially XRP, which continues gaining attention due to strong ETF demand and rising institutional interest. Over the weekend, global markets received a major boost after reports indicated that negotiations between the United States and Iran had made significant progress. According to reports, President Donald Trump stated that much of the peace agreement had already been negotiated, and both sides are now reportedly finalizing a 60-day ceasefire arrangement. If completed, this deal could potentially reopen the Strait of Hormuz, which is considered one of the world's most critical oil shipping routes. Investors understand the importance of this because any disruption in oil supply creates uncertainty across the global economy, and uncertainty often leads to panic selling in risk assets. But now, with hopes of reduced tensions in the Middle East, market sentiment is starting to recover. Crypto traders are especially focused on this development because digital assets typically perform better when investors feel more comfortable taking risks again. The Fear and Greed Index has already shown improvement, rising from extreme fear levels toward regular fear territory. While that may not sound exciting yet, it signals that investors are slowly regaining confidence. Historically, crypto markets tend to move aggressively once sentiment shifts from fear toward optimism, and many analysts believe this could become the foundation for the next major rally across Bitcoin, Ethereum, and XRP. Bitcoin remains the center of attention as it continues trading above the $77,000 support level. Even though Bitcoin is still facing resistance below the important 200-day exponential moving average near $81,000, bulls are showing impressive resilience. Analysts say this area is critical because reclaiming that level could completely change short-term momentum and potentially reopen the path toward recent highs. At the same time, Bitcoin is still managing to stay above its 50-day and 100-day moving averages, which are acting as dynamic support zones. This technical setup is keeping traders cautiously optimistic despite recent market weakness. Momentum indicators are still mixed, however. The Relative Strength Index remains near neutral territory, showing that buyers and sellers are currently battling for control. Meanwhile, the Money Flow Index has slipped toward oversold conditions, which some traders interpret as a sign that selling pressure could be running out of steam. If buyers step in aggressively at these levels, Bitcoin could quickly regain momentum. But if support fails, analysts warn that a deeper correction toward lower trendline support areas may still be possible. Right now, all eyes remain on whether Bitcoin can finally reclaim control above the $81,000 resistance zone. One of the biggest reasons investors are feeling more hopeful right now is because the broader macroeconomic environment appears to be stabilizing. For months, global markets have faced pressure from geopolitical tensions, inflation fears, and uncertainty surrounding energy supplies. The possibility of a United States and Iran agreement changes that narrative significantly. If the Strait of Hormuz fully reopens and energy markets calm down, investors may become more willing to move capital back into high-growth sectors like technology and cryptocurrency. This is extremely important for Bitcoin because crypto markets thrive when liquidity and confidence return to the system. Institutional investors especially pay close attention to macroeconomic developments, and many believe improved geopolitical stability could reignite demand for digital assets. We've already seen signs of that shift beginning as crypto prices stabilize, despite ongoing volatility in traditional financial markets. Bitcoin holding above key support levels during uncertain conditions is also being viewed as a sign of strength by many traders. Historically, periods of consolidation during fear-driven markets often lead to explosive moves later on. That's why many investors believe Bitcoin's current price action may actually represent accumulation rather than weakness, especially as large institutions continue monitoring the market closely for re-entry opportunities. Ethereum is also showing signs of resilience, despite remaining under pressure beneath major resistance levels. Right now, Ethereum is trading above the critical $2,100 support zone, which analysts consider a major lifeline for bulls. While the asset still trades below several important moving averages, traders are beginning to notice gradual improvements in momentum indicators. Ethereum has struggled recently because broader market uncertainty reduced appetite for altcoins, but that trend could begin changing if macroeconomic conditions improve. The relative strength index remains below neutral territory, suggesting sellers still have some control, but bearish momentum appears to be slowing. Many analysts say Ethereum simply needs one strong catalyst to regain bullish momentum, and improving market sentiment could become exactly that trigger. If Ethereum manages to reclaim its 50-day exponential moving average, traders believe confidence could return quickly across the altcoin sector. The network itself also remains fundamentally strong, with decentralized finance activity, staking participation, and institutional interest continuing to grow steadily. That's why many long-term investors are still confident in Ethereum's future despite current price weakness. The market is now watching closely to see whether Ethereum can defend its support zone long enough for bullish momentum to fully recover. XRP continues attracting major attention because despite broader market uncertainty, the asset has managed to remain relatively stable above $1.36. That stability is incredibly important because XRP has faced intense resistance from multiple technical levels, including moving averages and Bollinger Band resistance zones. Even with those obstacles, demand for XRP remains steady, especially as spot ETF interest continues growing. According to recent data, crypto investment products connected to XRP recorded significant inflows last week, pushing cumulative inflows above $1 billion. That's a huge milestone because it demonstrates that institutional investors are still paying close attention to XRP despite ongoing market volatility. Assets under management connected to XRP investment products have also climbed above $1 billion, further confirming strong investor participation. This growing institutional presence is one of the main reasons XRP supporters remain optimistic about long-term price potential. While technical indicators still show bearish pressure in the short term, oversold conditions suggest selling momentum may be weakening. If broader market sentiment improves alongside geopolitical stability, XRP could become one of the biggest beneficiaries due to its strong community support and increasing institutional demand. Many traders are now focusing on the relationship between global politics and crypto market performance because recent events have shown how interconnected these systems have become. In the past, cryptocurrency markets often moved independently from geopolitical developments, but today that's no longer the case. Institutional adoption has transformed crypto into a globally connected financial asset class, meaning events like a potential United States and Iran agreement can directly impact digital asset prices. Investors understand that peace negotiations reduce uncertainty, and reduced uncertainty often encourages capital to flow back into risk assets. That's exactly what we may be witnessing right now as Bitcoin, Ethereum, and XRP continue defending critical support zones despite months of fear-driven selling pressure. Analysts believe this environment creates the possibility for a strong recovery rally if investor confidence continues improving over the coming weeks. However, they also warn that markets remain fragile, meaning any negative headlines could quickly reverse sentiment again. This balance between optimism and caution is what makes the current crypto market so fascinating. Traders are essentially waiting for confirmation that the macroeconomic environment is truly stabilizing before aggressively increasing exposure to digital assets once again. Bitcoin's technical structure right now tells a very interesting story. Even though price action remains capped beneath the 200-day exponential moving average, the fact that Bitcoin continues holding above its 50-day and 100-day moving averages is keeping bullish hopes alive. Many analysts interpret this setup as a sign that the market is still attempting to establish a higher low before the next major move upward. The oversold reading on the money flow index is especially important because historically, deeply oversold conditions often precede strong recovery rallies once buyers regain confidence. Traders are also watching volume closely because increased buying activity near current levels could signal accumulation by larger market participants. If Bitcoin manages to reclaim the $81,000 zone, momentum traders could flood back into the market very quickly. That would likely trigger renewed interest across the entire crypto sector, including Ethereum and XRP. On the other hand, if Bitcoin loses support near $77,000, the market could face another wave of fear-driven selling. For now, though, bulls appear determined to defend current levels, and that resilience is giving investors reasons to remain cautiously optimistic heading into the coming weeks. Ethereum's situation is slightly different because the asset continues facing heavier technical resistance compared to Bitcoin. The price remains trapped beneath major moving averages ranging from roughly $2,200 to $2,500, which means bulls still have significant work ahead. However, many analysts point out that Ethereum's long-term structure remains intact despite recent weakness. The network continues expanding across decentralized finance, tokenization, and institutional blockchain adoption, which keeps long-term investors interested even during bearish periods. Ethereum's immediate support near the rising trend line around $2,070 is now considered a critical battlefield between buyers and sellers. If bulls defend that area successfully, momentum could gradually improve. Traders also believe Ethereum may benefit disproportionately if global risk sentiment continues recovering because altcoins typically outperform once Bitcoin stabilizes. The market has already started showing early signs of renewed interest in Ethereum-related products and ecosystem activity. While short-term indicators remain cautious, many investors are positioning themselves for the possibility of a broader altcoin rebound later this year. That's why Ethereum remains one of the most closely watched assets in the crypto market right now, despite ongoing bearish pressure. XRP's resilience is becoming increasingly difficult for the market to ignore. Even though the asset continues trading below multiple moving averages, steady ETF-related demand is helping maintain strong support levels. The fact that XRP investment products attracted $22 million in inflows last week shows that institutional investors are still actively building positions. This matters because institutional participation often signals growing long-term confidence rather than short-term speculation. XRP supporters believe the asset's unique position within cross-border payments and financial infrastructure could eventually lead to much broader adoption globally. That narrative continues attracting investors even during periods of market weakness. Technical indicators still show bearish momentum in the short term, but oversold conditions suggest the market may be approaching exhaustion on the downside. If buying pressure increases alongside improving global sentiment, XRP could potentially experience a strong reversal. Many traders are especially watching resistance near the $1.41 zone because reclaiming that level could shift momentum dramatically. Until then, XRP remains in consolidation mode, but the growing institutional interest surrounding spot ETFs is giving long-term holders plenty of reasons to stay optimistic about the future. The Fear and Greed Index moving out of extreme fear territory is another development that investors should pay attention to carefully. Sentiment indicators often act as early warning signs for major market reversals because they reflect the emotional state of investors. When fear becomes excessive, markets frequently reach oversold conditions that eventually attract bargain hunters. That appears to be happening right now as Bitcoin, Ethereum, and XRP continue stabilizing despite ongoing uncertainty. The move from extreme fear toward regular fear may seem small, but psychologically, it represents an important shift. Investors are no longer panicking at the same level they were just days ago. Instead, many are beginning to consider the possibility that the worst of the recent uncertainty may already be priced into the market. If geopolitical tensions continue easing and crypto prices remain stable, sentiment could improve much faster than expected. Historically, crypto markets tend to recover aggressively once confidence starts returning, because sidelined capital rushes back into the system quickly. That's why traders are monitoring sentiment indicators just as closely as price charts right now. The emotional state of the market could become one of the biggest drivers of crypto performance in the near future. Another important factor influencing the crypto market right now is institutional behavior. Large investors and financial firms continue treating Bitcoin and other major cryptocurrencies as increasingly legitimate asset classes. That trend has become especially visible through ETF inflows and growing institutional exposure to digital assets. XRP's strong inflow numbers are a perfect example of this broader trend. Despite regulatory uncertainty and short-term volatility, institutions are still allocating capital toward crypto-related investment products. This suggests that many professional investors see current market weakness as temporary rather than permanent. Bitcoin's ability to remain above $77,000 during uncertain macroeconomic conditions also reinforces the idea that institutional demand continues providing underlying support. Ethereum, meanwhile, remains deeply integrated into the broader blockchain ecosystem, making it difficult for institutional investors to ignore long-term. As geopolitical tensions potentially ease and global markets stabilize, institutions may feel more comfortable increasing exposure to risk assets again. That possibility is one of the biggest reasons crypto investors remain hopeful despite recent market turbulence. If institutional participation accelerates during the coming months, the next major bull cycle could arrive much faster than many currently expect. Traders are also watching oil markets closely because energy prices often influence broader financial sentiment. The Strait of Hormuz plays a crucial role in global energy transportation, so any progress toward reopening the route is viewed positively by investors worldwide. Lower energy-related uncertainty could reduce inflation fears and improve confidence across financial markets. That environment would likely benefit cryptocurrencies because investors typically become more willing to pursue growth-oriented assets when economic conditions appear stable. Bitcoin especially tends to perform well when liquidity and investor optimism increase simultaneously. The potential United States and Iran agreement therefore carries implications far beyond geopolitics alone. It could indirectly create conditions that support stronger performance across digital assets, stocks, and other risk markets. Analysts caution that negotiations are still ongoing, meaning unexpected developments could still create volatility. However, the fact that markets are already responding positively demonstrates how sensitive investor sentiment remains right now. Every new headline connected to these negotiations could potentially influence short-term crypto price action, making this one of the most closely monitored geopolitical stories in the financial world today. Looking ahead, the next few weeks could become extremely important for the future direction of the crypto market. Bitcoin remains near a critical decision point beneath the $81,000 resistance zone. Ethereum continues fighting to hold its key support area, and XRP is attempting to maintain momentum despite heavy resistance overhead. If geopolitical conditions continue improving and investor sentiment keeps recovering, these assets may finally gain the momentum needed for stronger upside moves. However, traders also understand that markets rarely move in straight lines. Volatility is likely to remain elevated as investors react to new economic data, geopolitical headlines, and technical market developments. That means patience and risk management remain essential for anyone participating in crypto markets right now. Analysts continue emphasizing the importance of watching support and resistance levels closely, because those areas will likely determine whether the current stabilization phase evolves into a true recovery rally. The combination of improving sentiment, institutional participation, and geopolitical optimism is creating an environment filled with both opportunity and uncertainty at the same time. That's exactly why the crypto market remains one of the most exciting financial sectors in the world today. XRP holders in particular are watching this market environment with growing excitement because many believe the asset is undervalued relative to its long-term potential. The increasing ETF demand, combined with steady institutional inflows, suggests that larger investors are beginning to recognize XRP's role within the evolving financial system. Supporters argue that XRP's utility in cross-border payments and transaction settlement could eventually drive much wider adoption across banks and financial institutions globally. While short-term technical charts still show caution, long-term believers remain focused on the bigger picture. They see current price consolidation as part of a broader accumulation phase rather than a sign of permanent weakness. If market sentiment improves alongside geopolitical stability, XRP could potentially benefit from both retail enthusiasm and institutional demand simultaneously. That combination has historically produced explosive moves in crypto markets. For now, traders remain focused on key resistance levels and ETF inflow trends, because those metrics could provide early clues about XRP's next major direction. The coming months may prove extremely important for determining whether XRP can finally regain stronger bullish momentum in the broader crypto market. At the end of the day, the crypto market is entering a fascinating period where global politics, institutional adoption, investor psychology, and technical analysis are all colliding at once. Bitcoin, Ethereum, and XRP are each holding critical support levels, while investors carefully evaluate whether improving geopolitical conditions can restore broader market confidence. The possibility of a United States and Iran agreement is giving markets hope that global uncertainty may finally begin easing, and that optimism is already starting to reflect in crypto price stability. While risks certainly remain, many investors believe the market could be preparing for a significant turning point if current trends continue. Bitcoin defending $77,000, Ethereum protecting the $2,100 zone, and XRP maintaining support above $1.36 are all signals that buyers are still actively participating despite recent fear-driven volatility. Whether this develops into a full recovery rally or simply another temporary bounce remains to be seen, but one thing is clear: the crypto market is far from losing momentum. And as always, XRP Insider will continue bringing you every major update, every important breakout, and every market-moving development as this story continues unfolding.